Good morning, traders. It is Thursday, February 27th. Taking a look at the charts, we got the SP 500 daily chart, and we've got another down day today. Yesterday, we started to get a little bit of traction, getting pretty extreme oversold, had a bounce, and then got sold into. Today, we're selling off, or actually last night, most of the selling actually took place. The first person with coronavirus was found in California, and I think that might have something to do with the markets potentially turning down a little bit. Obviously, it's spreading, and there's a lot of fear still creeping into the market. Overall, this pullback we're seeing is very significant, and we're going to eventually get a very sharp bounce. But again, you don't want to get in front of it. We got out of it somewhere up here as the market was rolling over and triggered our protective stop. Or maybe it was up here. I can't remember where we got stopped out. But overall, we're letting it free fall. We are long bonds. Bonds are up again today as kind of the safe haven play. And we are seeing gold and miners trading higher this morning as well. Now, if we take a look over at let's just pull up the US dollar real quick. If I can squeeze this chart in here. Here's the US dollar. And you can see here it's having a big down day today, which is probably helping precious metals a little bit. But overall, we've had 1, 2, 3, 4, 5 big down days in the dollar. We talked about it getting up here, getting overbought, and more or less it's having just a pullback, which is perfectly normal when you look at the dollar and the type of price action that it has. When price has these very strong pops, we tend to see the market pull back after these strong pops. This happens over and over and over again. It's had a very nice move. It had the initial run up, quick hiccup in the middle, and then came up to these recent highs over here, and then popped and kind of had an exhaustion move through it, and now it's just fizzling back down and could consolidate here for a little while. Overall, the dollar falling is helping, I think, hold the metals up a little bit here. But it is interesting that the dollar fell so hard the last 5 trading sessions, and gold actually fell as well. It just goes to show money is kind of flowing in all the assets and then out of all the assets. There's a lot of real fear going on, and I think the coronavirus has a little bit of a different angle because now it comes down to people worrying about their health. And when they're worried about their health, let's face it, if you're sick, you're not healthy, life sucks. And so people really don't care about money. They'd rather preserve their money and cash out of anything and just focus on themselves. So that's kind of where we are with this coronavirus. It could play into effect where people just don't care about their assets so much. They just want to liquidate and focus on family and stuff like that. So it's going to be interesting how this unfolds. Overall, we are getting pretty oversold. And if we take a look at the VIX, let's pull up the volatility index here. Look at the volatility index. Let's just zoom out, go way back in time here. More or less, we can go as far back as we want. But overall, I'm going to drop to the weekly chart. You get a better view. If you look at this weekly chart, it doesn't matter how far back we go. We'll just go here. More or less, where we are in this weekly chart is a pretty significant fear level in the market, where we've seen fear kind of tag this level several times in the past. It's kind of like almost like a major halfway point. Most of the time, fear comes up and gets rejected here. Overall, we could still see it, the fear kind of double and come up into this upper level up here, which is where we've seen. This is the weekly chart. So intra-week, we see the VIX spike up through the week, and then by the time the week closes, it comes back down. So overall, we could still see one big bout of selling in the equities market, one huge emotional panic sell-off in the equities market. The VIX would spike up, and if it gets up to this range, then we are looking really a good play if this is to happen is to short the TVIX or the VIXY, the VIXY ETF. Because they're going to fizzle back down and then potentially come all the way back down to their lower levels over time. Now, this is the weekly chart, so if it was to linger up here, you could be trading with underwater for a couple of months, but overall, these things will fizzle right back out, and those ETFs lose value over time, which is why if they come up to these extreme levels, you can short them. You do need to short them fairly quickly because there's limited amount of shares available. If you wait till late in the day, sometimes you can't get a hold get some to short. But overall, that's the type of strategy that if the VIX was to really blast off and everyone freaks out and we have another big leg down in the equities market, the VIX at this level, if you just hold on to it long enough, the inverse ETFs, or sorry, the inverse ETF shorted, the VIX ETF shorted will lose its value over time, and it is a great play going forward. Now let's go back, let's go over to the daily chart and take a look over at bonds. Bonds are up 0.4% this morning. If we take a look here, you can see we've run up, we're pushing up, breaking through these highs. Now overall, if we were to look at the short-term chart, here is the short-term chart of bonds. And more or less, yesterday they were forming a pattern here where they gapped down, they rallied up, this kind of pattern right here. We have this similar type of pattern over here. And typically when we see the market have a really strong run up and it gets frothy, gaps down and rallies up, we tend to see it kind of work itself down, fizzle down towards this 20-day moving average. And we've seen this same type of move again, and it gapped down, it's kind of popped up. Today it's going to go up a little bit higher. But overall, I do feel as though the stock market's going to bounce, and we'll see bonds fizzle back down towards this 20-day moving average, and kind of it is pretty frothy up here. And of course, on the daily chart, it's breaking out of long-term resistance, and it's still struggling at that resistance area. So overall, we could see bonds pull back, but we do have a lot of fear still in the market, and that fear is really driving bonds higher and having everybody run out of the equities market. Taking a look here, this is the daily chart of gold. Gold up again this morning, up about 0.75%. Again, it's got one of these type of overbought patterns in the market where it's had a nice run. We've got some volatility where we get this big spike and a drop. This is the type of price action where you usually see some type of consolidation in the market where it runs up and you get this big volatility. So we are not going to be surprised if price trades sideways or lower here. But of course, if we have a lot more fear and more things hit the market, we could see the gold continue to move up. And if this momentum carries through on pure fear, we can throw a Fibonacci extension and get an idea of where this will go. A conservative target wouldn't be this low. We'll take the next low and we go up to this high. We'll go to a closing price, come down to at least 2 bars here and carry it forward. If we look at that, we can see the upside target. If this momentum plays out and it goes parabolic here, we're looking at 1738 to the upside. And if it hits that level, I would expect a much larger correction and consolidation going forward. If we were to just zoom out on this chart, I would think if it gets up into this range, let me just draw on the chart. If it goes all the way up into this range, I would expect something big, a multi-month flag here, similar to this size of move over here that flagged out. More or less, this move from the high down to the low to the high over here is probably a Fibonacci measured move. Let's just actually take a peek at that and just see where that actually points to. Let's just make sure the chart's in here. If we take this low to this high and down to this low, well, what do you know? They're pretty much the exact same level. This run up, this consolidation, and this move coincides perfectly with this last final thrust to the upside. So 1740, 1738, if it hits that level, expect a multi-month consolidation, which will be super bullish, and it'll be just like one of these patterns. It's just a matter of time for things to work itself out before it takes another run, potentially to that 2000 mark. So that's what we're looking for gold. We'll see how things shake out going forward. Let's take a look over at silver. Silver up 1.2% this morning. Again, it's still in this big bull flag formation. Obviously, if it was to break out, we'd have the run up, the pullback, the second run up. We'd be looking at the mid-20s for it to get up to the upside. Of course, it hasn't fully broken out to a bull market like gold has yet. And gold miners this morning, they've had the run up, they've had the pullback, they've started the breakout, they are being rejected and again falling back down into this area. Today, gold miners are trading up a little bit near the high of yesterday. Hopefully we'll see it get some traction and keep on going higher going forward. Looking at natural gas, we just can't seem to catch a break with natural gas. It is down 4% this morning. The sellers just have been relentless in natural gas. It continues to pull back. It's coming down to test these lows. And we may end up getting stopped out of this play. We'll see where the market opens for UNG and how it plays out today. But overall, it had the initial pop and it just can't seem to catch a bid. And overall, it just continues to be under pressure here, and it's going to be flipping back to the downside, potentially if it gets below these levels here. So overall, natural gas just fizzling out and just can't seem to grab a bid and move higher. Looking at crude, down 3% this morning. Yesterday, it ended up coming down here, closing below this low, and now it's picking up speed to the downside. If we were to look, the downside potential here, we're talking about it being in this 44 area, somewhere right down here at these double day lows over here. Anyways, that's it for this morning. Talk to you in a little bit. Bye-bye.